Harendra Kumar, Managing Director for Institutional Equities at Elara Capital. He's joining us on the show right now. Harendra, thanks very much for taking out the time. What is the call at Elara now in terms of the overall market direction?
I think the Indian market is a very, very critical juncture. It's positioned ripe for a breakout. I think there are two macro variable triggers at the moment. One is, of course, over the next 3 to 4 years, the earnings CAGR is extremely strong at 23%. Number one. Number two is obviously once we cross over the hump of the elections in May, the possible risk that's priced into the market gives way, and there could be a re-rating. I think the conjunction of these two events could lift the market above into an all-time high, and I think from there, in terms of sectoral preferences and your stock picking changes. So I think the next 2 months are decisive, but broadly we are quite comfortable the market is breaking out into a new zone.
Your note, Harendra, good morning, Neeraj here. Your team's note on Q4 is pretty interesting too. A bottom line boost, but a muted top line. Is that the kind of quarter that you would settle with when you're looking at predicting that the index would have a breakout time?
Yeah, Neeraj, actually if you look at it, but the banking sector is actually showing quite robust growth, and that's very qualitatively it's quite a healthy sign, be it Axis Bank, ICICI Bank. These are large cap index heavyweights, so I think that is the outlier event here. And second, of course, the liquidity crunch that had hit the market is also easing up. If you also see the credit growth for the year for the banking system is quite decent in the mid-teens, and I think it is looking to go up from here on. So valuations which are the comfortable zone, credit growth uptake, and easing of liquidity mean the banking and the financial space, which is a large composition of the index, could lift the markets higher.
That's where exactly, Harendra, are you seeing leadership migrating now? Is it going to stay with the banks, like we've seen in the last few months, where the lead has been taken by banks? You think they're going to hold that position, or you've seen leadership migrating somewhere else?
No, I think banks will maintain the leadership out there, but I think the shift out there is that last year or the year before, the NBFCs were the outliers. I think they had a phenomenal run out there, but their market share has been taken over by some of the aggressive private banks such as ICICI and Axis. And secondly, I think you're in a very, very interesting zone for the PSU banks because they're beaten down, they're trading at sub-book. There is a commitment from the government in terms of recapitalizing them. I think once the clarity on the RBI reserves and how they want to recapitalize PSU banks comes through, the PSU banking space is also looking to contribute or add on to the space. So I would say that within the banking space, there's some rejigging and reallocation happening. So you need to realign to that.
A stock check, Shrikant, on ICICI Bank and Yes Bank?
Devinasi, like for ICICI Bank, view is very clear that it is into strong hands. The stock is managing to form higher highs whenever there is any specific rally in the market. This time also after hitting the levels of 405, 410, now it is again correcting back to its important support area. But I think the way there is like buying attraction at 380, 85 levels, we are of the view that we should look for adding long position if there is any correction during the day close to 380, 85 levels. But we like IndusInd Bank, which is like trading around 1740 levels, and the way the stock recovered from its lows of 1450, 1500 to almost 1850, we are of the view that the stock is ready to cross its previous high of 2000, which is decent upside from current levels. So there are like number of picks which are like there to buy for, but IndusInd Bank looks really good where the risk reward ratio is great.
Harendra, do you still see aftershocks of the crisis within the NBFCs playing out in Q4 for individual sectors?
Yeah, so there is some element of easing that's happening on the NBFC space, but I think some of the brokerage stocks such as IIFL, Edelweiss and Motilal, which have a mixed play of the market recovery as well as the NBFC angle, are better placed because you have triple tailwinds out there. And if you're expecting market volumes to go up and the fee income from investment banking deals in the pipeline to play back, these stocks which had been beaten down could see a trading bounce, even for that matter, even ICICI Securities. So I think there's a capital market / NBFC play which is there to be taken. and some of these names could give you better returns, in relative terms.
Okay, minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. Infosys and TCS will kickstart the nifty earnings season today. Steady deal wins expected for both tech giants, but margin pressures would remain.
Jet Airways suspends international operations after lessors ground another 10 planes over non-payment of dues.
Diwan Housing Finance sees another downgrade. Brickworks downgrades ratings on various instruments due to limited progress in easing liquidity concerns. The stock likely to start off 3% lower.
Radhakishan Damani's Derive Investments picks up 4.7% stake in the BSE listed Foods and Inns for 14.5 crores. Foods and Inns is a fruit pulp and concentrate exporter.
Watch out for Coromandel International in trade today. ICICI Prudential has cut its stake in the company by 3%.
Lastly, Lumax Auto joins hands with Germany's Job Holding in a 50-50 joint venture.
Well, that's gotten that stock excited too, 3.5% higher in trade. So some stocks in news, which are reacting. So Lumax is one, Foods and Inns is one. Jet Airways isn't quite reacting, but it's a stock that certainly remains in focus today. Harendra, what's the house view on aviation currently? Jet Airways is in a state of flux. In all probability will bounce back, but near-term gains for the others. Is it all in the price? How do you play this space?
No, it's not in the price. Actually, it's one of the most interesting trades over the short term, especially for, Indigo Spice. The reallocation of market share of Jet, I think that's the critical factor to look at it. It's already showing up in some of the numbers of Spice and Indigo in terms of the market share gains. Plus, you have tailwinds for the crude for the last quarter, which plays into the cost dynamic. So if one of the incumbent players is successful in actually leasing out jets, planes and the crew, that will be a massive trigger for the stock. So here the prime beneficiary could be SpiceJet. I think market is looking at consolidation industry and who's the potential beneficiary. If strategically they're able to realign some of the moves which are favorable for the company's fundamentals, the stock should see a significant re-rating from there on.
Reckon that this would be a tactical trade stroke investment as opposed to a slightly longer term one for either SpiceJet or Interglobe Aviation?
See, tactical it is, number one, because it's news-based and there are certain tailwinds of the crude and these market share gains over the last quarter which are playing up. It becomes structural if one of the players actually moves off from the industry, which is very unfortunate, but it leads to the industry consolidation, what we've seen in telecom. So you would have a two-player market, one with 40% market share and one with 20%, and the rest which are weaker. And that brings some stability to the industry and market. That players are then happy to take long-term positions. So I think that call, whether it becomes structural, could be taken after the Jet event is over and we've seen the final outcome of that. But at the moment, it's a very strong tactical trade.